is that even though gold is down, it's still in relatively high territory historically, yet silver really hasn't kept pace. And I was wondering if you had any thoughts on why that might be. One of your columns, you mentioned that everyone knows the price of silver, but not the value of silver. And could you expand on that a little bit in terms of taking a step back, what it is that we should be looking at? Well, it has been a little bit challenging to watch, although I guess the first thing I'd like to run by you is that even though gold is down, it's still in relatively high territory historically, yet silver really hasn't kept pace. And I was wondering if you had any thoughts on why that might be.
Well, there's so much going on and so much that's tentative. I think that trying to figure this out inside the bubble bowl, which I think all of us are in to a large extent, or either inside or looking into it, is something that is beyond the ability of any of us other than someone who is lucky, and even beyond skill, to interpret with a high degree of likelihood of getting it right, of not being wiped out, of not losing an arm or a leg trying to figure it out. And so my feeling is, and I'm going to mention a couple things that I saw within the last few days, which give me some pause, that I think, I've always talked about buy 2 or 3 tranches. I'm thinking about becoming a 10%er. Buy a 10 tranche and finally get 1 or 2 filled. There's so much possibility of a complete contagion and a complete loss of the ability of the markets to determine value. What is price discovery? Tell me something in the price discovery matrix called trust, called confidence, called belief, called confidence in your fellow trader or man, the closest trader to you, that indicates that you will not be wiped out accidentally or on purpose. And I'm worried about that. And I think people can do a few things that are completely outside their box and maybe outside of mine until recently to put those odds in the favor. And one of them is to stand outside or be outside and look outside that matrix and try to see with different eyes than maybe we've ever seen before. And maybe see something either because it hasn't been there and it's newly operative, or it has not revealed itself fully yet.
And perhaps you can explain that a little bit more in terms of, I know a lot of people are used to the way things trade and the way things have been going and seeing silver at a lower price. And one of your columns, you mentioned that everyone knows the price of silver, but not the value of silver. And could you expand on that a little bit in terms of taking a step back, what it is that we should be looking at?
Well, there are any number of people out there, including several that you and I listen to, including yourself, that are more knowledgeable about COT and overbought and oversold than I'll ever be. I use them kind of effectively from time to time, but I don't think that that's enough. For example, I just saw that Zimbabwe is developing gold coins enabled to help, keep being wiped out from inflation. And of course, we've had several places like Nigeria and El Salvador and whatnot that have developed some kind of altcoin or Bitcoin. And then there's a lot of informal ways of trading blockchain we don't hear about, but they all detract kind of like a death of 1,000 cuts from what we think of as payment system, of trust, of honesty, of delivery of what you say you're going to do. Bob Hoy, every few weeks, Bob Moriarty posts on his charts. And what he said, I'm just going to read a sentence here. He says, the ensuing, this is a sequential 9 buy setups, 9 consecutive up bars with closes below 4 bars earlier. The ensuing day saw our exhaustion index, which measures the strength of trend, in this case a downtrend, pushed to major oversold extremes in the XAU, HUI, and Newmont. All 13 examples in the last 3 decades saw replacement rallies to the 50-day moving average within a month. Double bottoms required bottom. common. And then also, I saw something else here. Jim Rickards was talking about the Fed wants to go another 75 basis point rate hike. And somebody, maybe a little sharper than these guys at the Fed, determined that this 75% base hike could have an effect of several X times the power of the 75%. I mean, it could be like 2% effect. Now, if that were to hit the markets, I'm not sure how well the markets could handle that. And this could bring something out of the woodwork that would just be, catastrophic. I'm not predicting. I'm saying it could. And if it could, Chris, I don't want to be involved in that. I don't want to be buying a third down and then see it drop another 70%. So people should look at that and say, how does this fit my model? And not only that, but I'm now outside looking in. I'm not looking at the COT for guidance. I'm looking at something else. And so that's something I wanted to share and get people to think about that. And other things maybe have recessed, but they're not quite that important. But that's a couple things to be done. And so my thinking is, now if this sort of thing happens, in 2008, I was up in Yukon on a 10-day tour looking at mines up there in miners, watching a 300-ounce gold pour, doré pour, and silver hit, I think it was 12, and I was doing some futures, and I thought, 12, I think that's about it. So I bought, and maybe I bought physical, I can't remember. A few days later, it was 9. Well, we got to the point where nobody's going to pay 9, and I think if these prices hit some crazy price, gold, silver, platinum, palladium, like they did in 2008, they stopped trading. I don't know, platinum. I think platinum was quoted at, I don't remember what it was, 600-700. Nobody was paying that. They were paying 400, and people are going to quit buying. Big hedge funds, anybody, small people, and the metal sellers are not going to sell metal at 9 and try to replace it $20 higher if they can get it. So I think that lady that presumably bought all those Krugerrand or American Silver Eagles is trying to or have. I think we're going to see outside the box thinking by institutions, by individuals, by businessmen. And I think if these prices get crazy and they go to 6, I think somebody's going to go to Keith Newmeyer and say, look, Keith, what's your break even? Add $5 or $6 to the premium, and give me 1 million ounces of your trade rounds in 90 days, and here's the money down for it. And if they're willing to do that, I think people are going to go to the miners, and I think they're going to start buying outside, and they're going to be outside the bubble in their own buying, and they're going to eviscerate the walls, the paper firewalls around the paper traders. You're not going to be able to go in and do a frontal attack. You're going to have to surround them with these moats and start battering them with the battering rams of getting rid of supply so that they can't get into them and they can't even take it with paper. So I think price discoveries will start to become organic by outside players, everybody from small players to people that want 50 million trade rounds of whatever. Does that hold any water in your view?